Hi everyone, it's Damien Levy for Binary Living Way webinar, and today I will explain you how to take properly the signals that each one of the signal provider provide in the group and any signal that you can find in the internet. What are the different vocabularies that we use and how to take it properly, if it's short-term or long-term signals. First, I will start with my own signal, like this one, call EURUSD with a SR strike rate below 1.07079. Expiry time will be the end of the next 5 minutes and the end of the next 15 minutes candle after the first touch. Take the first touch, don't wait me, because I ask people to not wait me because the first touch can be very fast and sometimes it will be complicated for me to take the first touch to take the trade with you and to post at the same time my entry, and when I will post my entry it will be already too late. That's why I consider it to take the first touch. Just follow my indication, and if there is some of the following examples that is against my signal, just wait for any of my advice under the post on Facebook and I can guide you correctly for each one of my signals. So first, call EURUSD. The currency that you will have to look at is EURUSD. Call, it means we will expect the currency to go up this way. And the yellow line, as you can see here, is my strike rate. This is the point, the price, where I want you to enter the trade for a call. And in this example, it is for 5 minutes, end of next 5 minute candle, or end of the next 15 minutes candle. In this chart, this is a 15-minute chart on MetaTrader platform because you can have a lot of drawing tools and good features that I will explain a little later. And it means, for example, let's say it is, we talk on 15-minute chart time frame, and this is 10 hour 25, and the actual candle will close at 10:30. So if I take the signal and the price reach this level at 10:25, I will take my trade for the expiration of the end of the next candle after the first touch, which will be 10:45. The actual candle is 10:25 and will end at 30, and the expiration for 15 minutes is 10:45. This is how you will take my signal if it's 15-minute chart. Now let's say it will be a 5-minute chart. I prefer you look at the 5-minute chart when I place a 5-minute trade, and this is the same case. Let's say I post my signal at this specific time, this vertical yellow line. You will wait the first touch from this point, touching the yellow horizontal line here, and you will want to make a call from here when the price will touch it. And if it touch, for example, at 8 hour 27, the end of this actual 5-minute candle will be 10:30 and the expiration will be 10:35, the end of the next candle after the first touch. To give you a practical example for this 5-minute chart, if we would have taken this trade, let's say my signal would have been put EURUSD at 1.07079. You will have taken and entered the trade when the price will have touched this horizontal yellow line here, and your expiration would have been the end of the next candle, exactly here. So for this example, you enter here and you exit here, and it is then in the money. Now let's look at the 15-minute chart, and let's stay where the signal will be a put from the first touch. I post my signal at this moment when the price break down, and this is a downtrend, big candle going down, the strength of the market is going down, so I take my SR at the horizontal yellow line, and I want you to take a put when it will touch it for the first time. Why the first time? Because the first time will be the most powerful. So I put my horizontal line here, and I want you to enter the trade when it will touch for the first time here. Exactly. So when it will touch here, you will have as an expiration, if it is a 15-minute chart for this one, not the end of the actual 15-minute candle, but the end of the next 15 minutes candle, which will be here. And as you can see, it would have been a huge in the money. This is how my signal works. It goes to the SR. So my SR, which is the support and resistance line also, is weakened by the two previous touch, and when it comes back again, it doesn't reject at all. It breaks it, and it's like a wild breakout up. That's why I conceal only to take the first touch here. Another point is sometimes the price will form a range before it touches the SR. For example, let's say this break up doesn't happen, but let's say my SR is not here, but is here. And I can see the price ranging here. And if you go on 30-minute chart, you will see there is a very big range here. And when the price touches it after this range, it's like an accumulation of strength. And when it get out, it is a breakout from this range. And when the price break out from a range or a channel, horizontal congestion zone like that, it has a lot of power. And as you can see, it breaks like two levels. This level in yellow and this level little lower. So it's like two levels that has been broken. And most likely the price will go up, break, and will stop at a certain point. But placing a trade against a big movement like that is very dangerous, so you have to be aware of it and you have to look at your chart. Looking at your chart can make you get out of a losing trade before it happens if you can recognize the signs that are against your signal. And in this specific case, when the price leaves the range and get out, we will wait for the price to come back to the range, and when it comes back to the range, this is our opportunity to make a call here. This will be a good opportunity for us. That's why I would have said this yellow line is my SR, because this is the top of a congestion area, and most likely it will reject up for the next touch of this zone. Now, when you take a trade based on a signal and on a specific SR, if you take a trade from a trader who will alert you just before the trade happen, you have to be fast in this kind of situation, and you go on your broker, like IQ in this example, and he will say to you, let's take a put at 0.9958, and you just have to wait this level, and when it goes, you make a put if it's put for the signal. In my signal specifically, I provide you the signal long time ago with this kind of screenshot and placing the horizontal line where you have to take the trade. It means on your broker, to remove any emotion from you, you have to do the same. You place an horizontal line. On IQ, the drawing tool are pretty good, so you can do the same. For example, let's say my signal would be here. I place my horizontal line, and now I am on 5-minute chart, and if I want to analyze a little more the price action, I will go on 1 minute and see if I see some deceleration of the price to take it safely. And when it reaches this specific white line, I know I have to push the trigger. And it removes also emotion, because you know you don't have to look at the price at the right side of your screen all the time. You just look at this horizontal line, and visually it's better because you remove any reflection process. You just see a white line, and when it touches this white line, you take a put or a call depending on the signal. So if you use this IQ platform, I really encourage you to place an horizontal line exactly at the strike rate, and when it touches strike rate, you have nothing to reflect. You take the signal in this way. You will be faster. And if you take any signal provider who is faster also, I still counsel you to place an horizontal line, because at least, yeah, it's a better process. No need to reflect on it, and you just push the trigger. The next thing is, for example, if we take binaries.com and we need to place an horizontal line, you can do so also. So if you trade with binaries.com and you need to take your trade and you want to see exactly at which level without having a reflection, you let a Windows open of this broker and you place your horizontal level here, for example, and you know when the price will touch it, you will have to take a put if it's a put for this specific signal. So plotting an horizontal line on your chart, depending on the signal, is a very helpful thing, and remove the reflection process and remove you to search, oh, it will touch this specific SR and so on and so forth. So following the candle against the signal, what I mean with that is, as I said before, this kind of candle show you a clear deceleration of the price. The first candle is very big, then the following become more little. this is what we call a deceleration in the momentum, and it's likely to tell you the price will reverse a little. So if you have a good SR here and you see the candle on 15 minutes chart acting this way, becoming little and little and little, most likely when it will touch the resistance, the price is already indecisive and it's likely to make a reversal in the opposite direction. So if you look at your chart and you see this kind of configuration, this is a perfect setup to take the trade, even if it is a second touch, because this is a second touch in this example. The things that I want you to focus on is the momentum of the candle, because this is a clear indication that the price is likely to do as you expect, or at the contrary. For example, this example, you have a big candle, not very big, but average, then followed by the same average candle, then an indecision candle, but the next is average also. So you don't know what will happen. There is no clear sign of exhaustion of the price. It takes one step, it stays a little, and it takes one step, and as you can see, the next step is breaking it. So the price tells you this one is not a very cool one. Maybe if you would have taken the trade here a little lower than the SR, this would have been a safer entry. But if you wait the price to touch it with a new acceleration and strength in the movement, this is not a good time to enter your trade. Now, placing a trade following the strength of the market that a lot of people call the trend, but for me this is more a strength in one direction or in the opposite direction, because as you can see, the previous movement here show you an acceleration and a strength going down, so it's likely to be a downtrend. But after there is this range here, and when the range happens, you don't know what can happen next. If it breaks up, it will continue to go up. If it breaks down, it will continue to go down. So we can suppose, since the power of the candle tells us that it will continue to go down, because big body candle, we will expect a downtrend, but it is not what happened here. And what happened here is a big candle going up, breaking up. So maybe this is a new trend, and what you want to be sure is when you want to take a signal at a specific level, you want to take it with the weakness and not against the strength. And if you take a put at this level, you can see a clear big body candle, and this is not a good sign for your trade. And most likely this level has been broken and it will maybe reverse at the next level. So you have to look at the strength of the market. What tells me the candle, the previous candle? Big body going up and still like 4 candles in a row going in the same direction. A lot of candle going down in the same direction, but a lot of wicks, so indecision in each one of them. The strength in the market from this moment here is likely to go up. And it is confirmed by getting out of this little range here and going up, up, up again. Now about the time. Every round hours, like 1 a.m., 2 a.m., 3 a.m. and etc. This is the beginning of the trading journey to a very big amount of people at a specific place around the world. It means when it's 1 a.m. GMT, it is the beginning of the working day, 8 a.m. for someone around the world. So a lot of people will arrive in the market at every round hours, and it creates a big amount of volume in trading. And if you trade during 1 round hours, you put yourself in a little danger, because on every round hours, the support and resistance can be broken because there is a difference of volume traded within the last hours and exactly at the round hour where you arrive. So I counsel to be careful when it's 9 a.m., 10 a.m. and every round hour along the day. So you can avoid and be aware and say to yourself, okay, this is exactly 8:55 and in 5 minutes this is the opening of a group of traders who will bring some amount of volume, so I have to be cautious on this specific trade. And the specific case that is the most important is the opening of the London market. As you know, we can trade for Forex and as the same way binary option 24 hours a day. This is because when a market is closed at New York, it's open in Tokyo, and if it's closed in Tokyo, it's open in London. So all around the world, different market, different hours, and different people making different decisions, and also different amount of trader, amount of money trading depending on each market. So when you left the Asian market tops at 6 GMT, you have 2 hours before the London Open at 8 GMT, or By now it's 7 GMT because it is summer time for their country. But during these 2 or these 1 hours between the Asian market and the London market, there is a very low volume of trader, which means when London open, it's like a rush of people at the opening of supermarket, and it creates a huge amount of volumes, and by this way it can break a lot of support and resistance in every chart that you can open. So when you go from Asian session around 6 a.m. GMT to 8 a.m. GMT, you have to take care and to be very cautious. So me, I counsel to don't trade 30 minutes before London open and 30 minutes after London open. If you don't have a specific strategy that can permit you to surf this wave of volume and something that is proven by result, etc. But most of the signals that we provide are not really made to this kind of specific situation. So I consider you really to avoid this London open. When you have the overlap of the New York session and London session, it's different because London session has already a lot of volume and New York make additional volume, but there is not difference of volume from nearly 0 to 1000. So be very careful on this specific hour time. Then, since I am on hour time, be very cautious also about the news. You can see on the economic calendar of investing.com here, it's free access. You have all the news of the day for Forex market. And when there is 2 bullhead like here, this news will impact the market. So, based on research from the Harvard and financial schools, a news with 2 or 3 bullhead in volatility impact will impact the market 20 minutes before, during 20 minutes before, and during 20 minutes after the release of this data. So, me personally, if I see a news on USD with 2 bullhead, for example, I will open my alarm on Windows and I will plot an alarm at 0 hour 40, so 20 minutes before, and I will make a repetition of this 30 minutes after or 40 minutes after if I can. Plotting an alert on my Windows permit me to be alerted even if my Google Chrome, my Mozilla Firefox is closed. And it's very important because I can get out of the market when it's dangerous. So that's why I consider to use the alarm of Windows and not the alert of any browser's feature. For example, in investing.com, in the economic calendar, you have access to this feature, create an alert. And it can be good for your phone because your phone has a specific notification and you will see it. So you select frequency once or maybe recurring if it's news data that happen every month. Send me a reminder 15 minutes after, which is the best, and I conceal, and you say create. And every time this news release will appear, you will receive an alert on your phone if you have the application of investing.com. Then, if you have an extra big candle, exactly what happened in our example of Euro USD. Extra big candle can mean 2 things. This, for example, white extra big candle going down, you can see the 5 previous candles are very narrow, very little, and in one candle there is like 1 time, 2 times, 3 times, maybe 4 times the range of the 5 previous candles. This is not a normal situation, and it can mean 2 things. The first thing is there is a large amount of volume, and if I show you the volume here, you can see my blue candle here is very huge, so it's okay, it's correlated with a big amount of volume, but sometimes it is a manipulation by the big money insiders and market makers. And it can say it is a fake big candle, and if it's a fake big candle without big volume, it means it will certainly reverse. But if it's a real one with big volume like that, it will continue and it's a breakout. So when this happens and you see big volume happen in one candle, you just stay out of the market for sometimes. If it's a 15-minute chart, I would say 1 hour. You wait 1 hour. After 1 hour, the influence of these big monies, these big people is gone, and you can start to trade again and have quite good configuration for your trade, and the market is a little less chaotic. But when you see the same example appears here with this big candle and huge volume at the end of the market, no, actually this is a fake. It means there is only little volume here, as you can see, and very big candle. This is an anomaly which is created by the market makers and the insider, but the volume are not correlated. So there is a little manipulation from these big guys to the market. So you can expect a reversal from this one. But still, it's not safe to work that, because when they manipulate the market, they are the master of it, and it doesn't rely on the rules that we study about Fibonacci, support and resistance, and etc. So if there is an extra big candle like that, I just counsel you to stay out and don't take the trade. It can be complicated because you don't see it happen. But if you place a trade here and you see the candle making a very big move against you, your opportunity is to sell it if your expiration is too short, and don't enter again because you don't know where it will reverse with this kind of configuration, and it's very dangerous for you. Enter one trade by setup and by expiry. I mean, when I give you this signal for Euro USD, you will take only one trade and for one expiration. If you take two trades, one for 5 minutes, one for 15 minutes, it can be good, but if the price goes against you, you will lose two trades. So most of the time, me and other signal provider, we will confirm you the expiration time, even if in the signal there is two expiration time, which can be good. We will confirm one expiration time, and I counsel you to follow the expiration times that we take. Correlation between pairs. Yeah, for example, Euro USD and USD CHF are oppositely correlated. As you can see, you have nearly exactly the same situation at the opposite direction. You have range here, you have range here, and after you have a break up and a break down here. So this pair is very correlated. It means when you will take a put on Euro USD, and if you take a call on the USD CHF, it's like you are taking the same trades. So if both win, you win both, but if you lose one, you lose both. So if the signal, for my signal for example, if two signals appear at the same time and they are from two currency pairs who are correlated, you need to take care of that. And if you take two signals at the same time, you need to don't take signal against each other or in the same direction, because you will make the same trade, actually, because of the correlation of the pairs. I counsel you to focus on one currency, to focus for example on Euro USD, to keep the same example, and to be ready to take the very best entry points that you can take. And when you are inside this trade and you think you have nothing else to do, just to wait for the expiration, you can go to the next signal for USD CHF and take for example this signal here. Take it one at a time and take it properly one by one. Don't chase 2-3 currencies at the same time and do it in a rush time, because you will not get the best strike rate on every trade that you will take. And this is the most important, because sometimes the difference between a losing and a winning is only like 2 micro pips, so you really have to take the trade the best as you can. So focus on one. If you miss one opportunity, don't worry, there will be a lot of signal. So don't worry about that. Focus on one, take it properly, and after you go to the next. So now let's look at other signal providers that you can find everywhere, and be careful because every signal provider has his own style of trading, and about the expiration time, most of the time it can be different. For example, in our group, I think, and I'm not sure, but I think FODZ gives you a signal on Euro USD for a call at this specific level, and you will have to take the signal for, if it's a fixed expiration like that, he will tell you expiration 5 minutes. It will mean for him that when it touches this specific strike rate, you will have to take exactly 5 minutes. So if it touches at 7:14, you will have to take the expiration for 7:19 and not 7:20. So be careful about that. Ask the signal provider what he counsels you, and be disciplined and follow each rules of each signal providers regarding the expiration, because the expiration can make the difference also between a winning and a losing one. And each strategy has its difference, so everyone customize it at his own taste and trading style, so you have to be according to that. Now let's look how to create an alert. As you know, for example, if I take 15-minute chart trades and I will place maybe 10 signal during a day at the beginning of my session, and after we have to wait for the signal to be reached, to the strike rate to be reached, and when it's reached we take the trade in the direction of the signal. I don't want you to wait all the day waiting for my signal, and this is not what I do also. You just have to minimize your screen, and what permits you to do so is to create an alert. So for example, let's say my strike rate is here. I start by plotting an horizontal line, and I use MetaTrader because until now MetaTrader is the best platform to plot any audio files that you want, and I created specific audio to help me to be alerted and for MetaTrader to tell me sell Euro USD for 15 minutes, sell Euro USD for 5 minutes, sell Euro USD for end of the day. So it's very efficient, and for me it makes me win time because I just have to plot my alert on MetaTrader. After I minimize it and I go, and when the signal tells me sell Euro USD, I just take a quick look at my chart here, then I open my trading platform like IQ, and I just have to wait the exact strike rate and I take my trades. So I win a lot of time, and I don't wait all the day for my point and my strike rate to be reached. So how can you do that? When you are on MetaTrader, first I created a lot of sounds, and these sounds you can find them on Binary Living Way in the file section. You just download it, then you extract all the WAV files, and you go in your computer, local disk C, program files. Depending on your MetaTrader, it can be FXM, for example, MetaTrader, and you go in sounds and you copy paste all your WAV files here. All these are the type of alerts that you can choose. When you paste all your WAV files here, you will have access it directly on MetaTrader, and that's what I explained you now. You right click on your chart, you go in trading, and you go to alert. This will create a red arrow on the right of your chart. You double click on it and it's enabled. The action is sound. The symbol is Euro USD because it is your current chart actually. It will plot automatically based on the chart you are on. Then the expiration, you can set the expiration for the end of the week if you want to use all the week this alert for this specific currency pair. Then the condition can be bid superior if you want the alert to ring when the price will be above your red arrow. It can be bid inferior if you want the alert to ring when the price will be below the red arrow. Then the value, nothing to change here because you can move the red arrow automatically actually. Let me show you. You can move from here up to down, and this is a good feature. And when it's below, as you can hear, maybe it ring. So let's return to the parameters and the source. This will be your sound file that you will use that will tell you exactly what action you have to do. For me, for example, it is sell Euro USD, the exact name of the file that I know. I will say 5 minutes. I type here, I confirm it that it is the right one, and as you can see it appears on my list. This is the list of all the WAV files that I have on my MetaTrader, and I have nearly all the currency pairs, and I have 5 minutes, 15 minutes, and end of the day. So I select sell Euro USD for 5 because I want to make a trade for 5 minutes. I can test it. Maximum of time it will tell me, so me I put 50, so it doesn't stop until I shut the alert, and I say OK. Now my SR is the yellow line, so here 1.07342. But I want to be alerted before the price reach it, so I have the time to settle the right expiration time on my broker and the right amount and verify all the data that I need to plot to make my trade correct under the broker. And I plot my alert a little lower if it will be a put, so when the price will reach a little lower but ready to touch, I will be alerted and I will have enough time to be ready to take the trade. And if it's a call, for example my SR is here, I change my alert, the bid I transform to bid inferior, and a SAT to sell I will make buy. This is the name of my
buy Euro USD 5,
and I plot my alert just above, so I will be alert when the price will be here, which let me enough time to take my trade when the price will reach my SR, which is my horizontal yellow line. So this is how you plot an alert on MetaTrader. And I conceal it because if you have a computer and if you're at home, you just open your MetaTrader, you let it open, you put your sound at nearly the maximum so you can hear it, and you can go in the kitchen, cook, take care of your laundry, whatever you need to do, and you can have other occupation, and your computer will tell you when it's time to come back to your computer and to take the trade. So it's very efficient. But for the people who doesn't have MetaTrader, there is other solution, and one of them is, again, investing.com. You go in the alert feature here, and you can create an alert for every currency that you want. So, for example, we will still take Euro USD, FX, which means Forex, that's what we trade. Then we go condition, the price move above this price if it's a put, and a little lower that I wanted, so 24. And it will send me a website notification and a mobile application notification. I can set it only once and I create an alert. It's done. As you can see, the status is open, so the website will send me a notification on my phone by the application investing.com that I have already installed on my phone, and I receive an alert for the price. Not with a MetaTrader, which is computer based, most of the time home based, but if you are at works and you have your phone on your pocket and you want to be able to trade sometimes, because 15 minutes trade you have more margin to take the trade, so you have the time to place correctly the trade. So you just use investing.com, it will send you a notification whenever the price is near your strike rate, and you go on your application of IQ option, for example, it can be another, and you place your trade. This is a second way to create an alert using a website that will send you a notification on your mobile phone, which is a good feature. So about the sound file, how to locate them. On Binary Living Way, this is the Binary Living Way group, you have files section here, and in the file section you have the sounds zip file. You just download it and you can have access to the alert on your MetaTrader platform. Okay, so my presentation is done. That's pretty it for how to take properly a signal from any signal provider and how to set an alert when the signal is very far